Um, my name is Madhu. I'll be your speaker for next half an hour, 45 minutes. So we'll talk more about how open banking has. I think this is Neobank, the other one. You'll have to put the other one. This is the Neobank one. While the slides look similar, the content are different. While that gets sorted out, any of us from the banking domain here, fintech, banking, open bank? Okay. So usually, we start this session pretty much with understanding of fintech domain and what it brings to the table. However, in this case, what I'll do is I'll just straight away jump into how the open banking has changed the whole lending ecosystem. So I happen to be the first-hand, the person to experience it firsthand back in India. So I lead a company which is mostly doing what open banking is all about. So it's even more interesting for me to talk about what we are doing here. So as a matter of fact, the open banking, it's not a new concept per se. In the global market, if you see, it's not new at all. It's been there since 1980s. I think Germans were the first to try it out. German post office, they were the first to try it out in terms of how this ecosystem can work. Now, across the world, we have multiple companies or multiple government agencies have given the permission to start the open banking ecosystem. So as a matter of fact, in India, we have multiple open banking channels. The companies like some of them focus only on the credit part of it, some on the lending side of it, some just give the credit rating, some work on the personal finance. There are multiple opportunities available there. So as you rightly said, the modern technology can also be boon and bane both. So in open banking, I assume so far it has been boon for all of us. So we'll just look at how it works so far. So this is a market segment which will grow into $160 billion business right by the end of 2032. That's what we are seeing. And we are also looking at close to 50% of the world would be using open banks by 2024. So this is what the premise with which most of us are working towards ensuring that there is a better lending platforms for people tomorrow. So why do these do exist at all? Open banking is actually to help companies to give innovative solutions to the end customer. So typically, if you see the regular banking sector, there is a lot of rigidity in terms of the change of ecosystem, especially the IT space. A lot of banks, I can vouch for that in India as well as in the Middle East, where I spent almost 15 years working with different industries here. The IT sector, IT infrastructure is very, very legacy. It's based on legacy. So that has to change, and then once that happens, a lot of newer the innovations can happen here. So this is what we are helping open banks so far. It has been in terms of the big data. So that is something which all of us are betting heavily on it. Especially when it comes to using big data for alternate credit risk model, or even for that matter using to figure out what kind of spending habits, what kind of usage, what is the customer doing. So the big data really helps us, especially my company, we are working on machine learning and AI to figure out what could be the possibility of the default or the credit worthiness of a customer. So that's what we do. And also what is helping across the world is the user base, which is mostly to do with the millennials and Gen Z adoption. So that is what is helping. A lot of the population is less than 25 years or 30 years of age. So that's actually helping the revolution of open banks. Also, it is, the cost effectiveness to the core banking, what we have seen so far. Typical banks, spend a lot of money and time on customer acquisition, whereas for the open banks or the neobanks or the alternate fintech model, what we have, the cost of acquisition is very, very minimal for us. So that's where it is helping us to set it up as quickly as possible and also make profitable, as quickly as possible. So also, what is helping the open banks is also about the microservices, which is helping us focus on a very specializations. Like in our case, it is specializing in tiny, nano, and unorganized industry. So similarly, this is what is happening across the world. We see. So also the alternate credit risk model, as I just mentioned. So usually what happens in an SME bank segment, this is what we have noticed, not just in India, but across Europe as well as Middle East, is time to say yes to a loan is usually 2 to 3 weeks. The times have, the turnaround times is coming down, but still, as a matter of fact, it is between 2 to 3 weeks in a traditional bank. And time to money, as we call, from the application to the money reaches the end customer, it's usually taking somewhere between 3 to 4 months. This is what is happening even in Middle East as well as we see back in India also. And this is true even in Europe. Okay. So why is it taking so much time? It is because of the fact that there is so much background, the regulations, be it the bank's regulations or the central agencies regulations, or the understanding of customer, understanding the customer's ability to do a business, or do a kind of the reason why the person is even taking a loan in first place. So these things are taking time. So that has impacted a lot of SME businesses across the world. So what we have seen in the last few years, especially I would rather say post-COVID, back where I come from, we have ensured, the industry so far has ensured the time to yes has come down to anywhere between 24 hours to 6 hours to 8 hours, in some cases 5 minutes, as they claim, the eligibility for loan per se. Even time to money has been reduced from whatever the time 2-3 weeks to 2-3 days now. So as a matter of fact, my mandate, what I am personally working on, is to ensure that the time to say yes is real time. Okay, so that is what the business wants. SME business or micro business or small businesses. That's what they are looking at. Time to say yes to a loan, if it can be a real time, and if the money can reach them in a few minutes. So that is where the whole, the ecosystem or the game changer is going to happen. And so for that alternate credit risk model, as we call, that is going to play a very vital role. Okay. So towards the end, I will also show some of these things, how we are doing, so that it helps to understand in a much more real-time way. So what lending revolution or the open banks have provided us is greater transparency in terms of the whole loan process, the lending process. So what we have seen so far in the ecosystem, especially if you go to the traditional bank, perhaps the whole, I'm talking from a first person point of view here, because when we started our business 3 years ago, we went to the banks for loan, business loan. So how we were actually rejected, or how we were made to go through a process of, all the documentation. So we said, when we become a bank ourselves, we'll not make our customer go through. So that's one of the reasons, the transparency becomes very, very important. And open banks is providing that transparency. So innovation, in terms of the minutest detail, what customer wants, that is where this innovation is coming. I'll give you a simple example. Many a times, what we have noticed is the EMI or the monthly installments what customers are paying. Many times in the segment, like, the bottom of the pyramid, if you look at the whole, the ecosystem of the lend-tech market, there is some majority of the people, I would rather say 40-50% of them don't get access to credit. And that's because, they don't have the credit history. That is where the alternate credit model which comes into picture. One is in a way of innovation. And the other thing, what we have also seen is the EMI, monthly installment schemes, where instead of monthly installment, sometimes people would prefer daily, weekly, bi-weekly, once in 10 days. So all those things are possible through open bank rather than a traditional bank. So that's another way of reaching out to the customer, giving the whole control to the customer, what he wants and how he wants. Okay. So it also offers a better range of services. More than the service, what I would also feel is the financial awareness. Many banks globally have tried becoming more customer friendly by providing financial literacy, while it's happening in pockets. That is where a neobank or an Opal bank comes into picture and make sure that the customer awareness is created because of the hyper-local or the pockets of which they serve. Very specialized customer segment. That is where it helps them. Some of the innovations, what we just spoke about, the customer centricity, which is where a lot of product creation is happening. For example, we work in a micro space, so where we have created micro insurance, micro pensions, the micro loans, just to cater to the current the existing customer base. Looking at what those people are into, and that's how the whole ecosystem of innovation in open banks happening for us. Some of the tools, using ML and AI for us. What we have also seen, in the global market, this usage of machine learning is helping to understand the customer better. It is also helping us internally. We have seen that, and also in the market, what we have seen. One of the classic example I would give from the Middle East, where I worked personally, was STC, a Saudi telecom company, where they have STC Pay, so which is online payment. Like in India, we have Paytm or the Bharat Pay. So STC Pay also is one of those tool which has learnt through the customer data over a period of time using machine learning and what they are doing there. So the low cost is helping as well as agility in terms of the speed at which the products gets released, the speed at which the process changes happen. It is helping the customer. At the end of the day, keeping customer as the whole epicenter of what we're doing. So I see there is a huge scope here in the Middle East, especially looking at what open banks can provide here. The whole ecosystem, just changing. The lending space, especially if you look at in the Middle East, I feel very excited, to look and work on what can happen here, because we have almost like 90% of the population, having internet connectivity across length and breadth of Middle East, and also more than 50% of the people are less than 30 years, or even I would say 25 years. That's a young population which would definitely look at banking, especially the lend space, more in a realistic as well as in a more creative way than typical of us who would have probably seen in the Gen Z and Y. So what I'm also told is by 2026, the 2/3 of the population here would have a 5G. So that would also ensure that the faster connectivity, and also ensure that the technology reaches to the right hands, please. So I'm just going to pause for a while and see if any of you have any questions, or should we do it at the end? So like yesterday, somebody said, the speaker, either I've confused you so much or I've convinced you so much that I don't have to answer questions. Yeah, as I said right at the beginning, the market size, what we are looking at by 2032 is around $160 billion globally. So in my view, I think it is completely underrated because where I come from, we are already looking at $220 billion by 2030. So. So highest growth potential, as I would see, is in the developing countries. Especially I would say where we are working currently. This Indian subcontinent. I would also see Latin America. I would say a lot of Africa. So that is where this would have a huge impact. While it is also in UK and US, we have already seen this revolution happening for the last few years. So the bigger potential, because the mass market, if you ask me, mass market is in Middle East and in Africa, in Asia. So that is where you have larger population, as well as the first to credit. That is a market segment which would be very, very lucrative for open banks, the first to credit. So that you will find the bigger chunk in this geography. No, I think the consolidation is, it's an ongoing process. It's not like I always say that, back home we have a $220 billion loan market, the lendtech space. There are already traditional players. There are also open banks. I also exist in that ecosystem. But I always say that there is huge scope for many new entrants to come in because it's not a saturated market per se. It is not a saturated competition yet. There are so many people. For me, it is like how creative and how innovative you can be. You can exist and coexist in this model. So that's what I believe in. Yeah. So just to add back to what you said and also to get back there, what helps in this kind of geographies is also the deeper risk assessment, what we do through alternate credit risk. Traditional banks, what we have seen in what we call know your customer, KYC. It's all about your banking history. It's all about your credit history from the bureaus what we have. So what we have done and what this alternate credit risk model helps people is to understand deeper in terms of their spending habits, their saving habits. We are capturing that through our application. I can also show you towards the end how we do it. So it helps us in understanding what a customer would do at a particular week or a particular day in a month or in a week or in a space of 5-10 days, initial 10 days, towards the end of 10 days. How would he react? When would he take loan, or when would he wants a certain amount of money in his account? All these things we can, we are capturing using this model. And also it helps in, as we say that, faster and efficient loan process. Why we say that is, as we said, time to say yes and time to credit, or time to the money has come down from days to hours. So, I personally will be more happy if it comes down to real time. So, which is what, makes all the more difference to customer. So, the model which we are also, trying to explore is how soon the customer can have access to money. So, that is where the whole ecosystem in the, the emerging market has played out. So, this is what we are doing so far, as I just mentioned out. As a company, we are focusing on something called two-click micro accounting, which helps customers of this size, especially when it comes to alternate credit modeling or alternate loan system ecosystem. This helps us to understand the customer deeper and to make sure that whatever we are giving them as credit options are real time. It's what we are doing there. So this particular product caters to a industry segment which is completely non-bankable so far as the traditional banks are concerned. So there is no credit history, there is no loan history, financially no data is available. Completely unaware of their financial knowledge is completely, I would say, very, very limited. So that's the kind of segment we are working on, and that is where our open banking system is coming into greater picture here. Can we go to the other slide, Ashif? Can we go to the other one? Yeah. So this is what we are doing, as far as the open banking is concerned, which is what we feel. A kind of market segment, especially in the emerging markets, I would rather say India, Middle East, or even Africa and Latin America. It plays a huge importance, not leaving everything at the mercy of technology. We also included the human element to it. So that's why we call it as business to humans and phygital. Physical as well as digital is what we have done when it comes to the micro lending to the customers. So that has helped us to capture and make sure the biggest challenge in the lending space has always been the recovery. So for us, the bigger it became like a not a challenge, but in terms of how we could have perhaps addressed it. And what we have done is to have the hyper local people on the ground to help us to recover faster. So that is another of the innovation which open banking system provides us. So can we move on? Yeah. So this is how typical, the open banking system, what we have created looks like for us. We have so many value differentiators, which is what I assume that many open banks in across the world are currently working on. So what helps us is to understand them by providing financial health assessment, which is free for them. So similarly, we have seen many other players in the different geographies are doing this. So thereby it helps them to understand their customer base better, and that helps in a better time to say yes to the customer. So what we are also working, as you see on the other side, financial assessment. So that says people are this person is 93% ready to get loan. So this is how we are trying to make it a real time. So moment it crosses certain number, what we have put there, he can click a button for apply for loan. So that automatically gets enabled. So that way we are, the time to say yes has come down to as close to as real time as it is possible. So that is something which we are particularly working on. So we're also looking at how this can be taken as an innovation, where all that he has to do is, if he has got that kind of a rating, how this money can be integrated there. So the bigger challenge here is the regulatory systems. So how that regulatory plays out for us is how we are going to look at it. So with this, I think I'm, it says time's up for me. So any questions, please feel free to ask me, or any thought process. Yeah. Please do ask some questions, because I prepared for questions. Sorry? This is in multilingual. Almost all Indian languages are available, and the app is built in such a way that any language you want to have Arabic in here, it can be added here, or you want to add Latin American or anything for that matter. So that is the beauty of this app. So it's completely, as I said, cost effective, what we had done previously. So that's how it works. Yeah.
But this may be a very confidential question for you to answer. How this pricing mechanism for if they have to subscribe, or it's free?
What we have done is it's free. We've kept the app free. So only when they take loan is when we charge them. So that's another innovation, right? You can say customer acquisition, but that's how we do it. And the best part for us is, even good for us is it's a B2B2C. We don't work with the customers directly. We work with different NGOs. We work with government bodies and agencies. So that is helping. Again, it's another innovative way of looking at the market segment. Sorry, I think you had, he has a mic there back. Yeah.
Yeah, hi. My name is Venki. Hi. I'm just, so you're also giving loans to consumers, right?
Yeah.
So how do you manage the collateral? Like, is it homes? Is it, what is it? It's personal loans?
No, it's a completely collateral-free model, what we are working. And again, that is why I said the whole ecosystem of open banking has given us that option where how do I ensure my customer gives me back my money is by using my application. So the platform, what we have, that platform tells me I'm not going to loan anybody on the day one. They have to stay on my platform for some time. Usually we say between 30 to 45 days to understand their credit worthiness. Most of us, most importantly for me, it is about how serious are you when it comes to your business. Okay, so based on that business transaction, based on the history of what we are seeing, is what loan is provided here. So we have a different models, back home, if you see in India. So we have collateral-based loans and collateral-free loans. So collateral-free loans are also based on various other parameters. I'm just not giving them money just like that. So we also use a lot of what we call it as India Stack KYC. There is so many things which are as per our the RBI, which is Reserve Bank of India, has asked us to do it. So we do it. And most importantly, this collateral, the loan is also for us guaranteed as a group loans. We don't provide, as I said, we don't acquire customers individually. We acquire them in bulks. So that helps when an NGO guarantees or an industry body guarantees us. These people would be providing it back.
So are you actually funding those loans, or you work with other banks and stuff to fund the loan?
It's a multiple model. We work with different banks. As I speak to you, I just had a conversation with a couple of banks back in India, and we also have our own funds to lend it. So we do multiple models. That's another beauty of having it as an open bank and keeping it good. Yeah, thank you. You had some question, yeah.
How are you doing, sir?
Good.
Quick question. I wanted to find out what's the main target audience for the financial wellness app?
Sorry, it was not very clear.
Main target audience, target market, age group, demographics.
Sorry, I'm not able to comprehend your question. Sorry. Okay. Okay. So you're talking about the market, as you said.
Yeah, that's just like the first question, and then I'll move on to the second question.
Okay.
So I just wanted,
Sorry, the first question first would be the market segment for me, as I mentioned right from the beginning, as an organization. So we are focusing on tiny, nano, and micro entrepreneurs, the unorganized sector, what we call. So it's close to 29 million people back home for me. So that's a huge market segment in itself. But that's just at the bottom of the pyramid. So as we grow, what we have is a graduation model, so which helps me to graduate my customer to the next levels. That's how we work with.
Okay. Another thing that I don't know what you think about this, but since the world is moving to a different direction in terms of finance and in terms of position of money and all of that stuff, and education about finance, we're moving into a different direction in terms of blockchain, cryptocurrencies, trading, stock market, and the education part of it as well. Does the open bank incorporate that in the education and in the serving the platform to the audience?
Yeah, I mean, the open banks are not just restricted only in one space, right? It's happening in multiple financial spaces. If you ask, there are so many wealth tech companies who are in the open banking segment, open bank companies who are there in the wealth tech center, or even for that matter, if you ask cryptocurrencies, yes, there are so many players in the market available there. Okay, so they all work with that's the beauty, isn't it? It gives you an opportunity to at a micro level, create your service. Unlike a traditional bank, which would perhaps be a one-stop solution. So the open banks or the neobanks are helping you to concentrate on one particular segment or one particular, the product which gives them much better control and specialization.
Okay, so what you're saying is that the finance wellness doesn't incorporate that part of
Yeah,
it doesn't incorporate,
yeah.
but like other companies also that you merge with or collaborate with, do they
Yes.
offer some services in that sense?
Yes. You're talking about collaboration, right?
Yes.
Yes, it is.
And then I'm asking that my finance wellness doesn't
Yeah.
have that.
No,
type
we do that. As an organization, when you said, we focus on a particular product,
Yeah.
and we also have tie-ups, which is what we use for cross-sell and upsell. With other, certain banks provide insurance for us, certain bank provide, the mutual fund options for us, somebody else provide gold loan. There are
Okay.
different players. So at the end of the day, it's the collaboration which we work with. Yeah.
All right. Sorry, I just have so many questions, and I'm interested in this type of industry and the education of finance to people, considering what's happening in the world, and many lower and middle classes are struggling to make ends meet, and they need more financial education.
True.
With my finance wellness, how long has it been operating?
We've been in the market for last 3 years.
Last 3 years.
With over close to 40,000 plus customer base as of now in just few states back in India. So we have not even gone pan-India yet. So
Oh.
that's the kind of, the requirement what the market has.
All right. Last question.
Sure.
In less than 10 words, what is the unique selling point of my finance wellness?
Well, the organization is a unique selling point. I would not rather just restrict it to my finance wellness, but there are many players like me in the market. Our unique selling proposition has always been our agility and the continuous innovation. Not just me, every other open bank or neobank which exists everywhere. The USP has always been putting customer at the very center of everything. So that's the design thinking what we all believe in. As an industry, we believe in design thinking, which puts customer at the very heart of the whole the innovation or the kind of products which we would want to. I'll give you a small example, right? Back home when I went back from Middle East to India, so every time I deal with one particular bank, huge bank. So I went back and I said, look, I had some savings I want to put in. So the person was only selling his bank product, right? Which typically happens in any banking domain, right? But whereas if I look at a wealth tech company which was helping me, narrow it down from 3 different options available. So how did that happen is because, again, keeping me in the center of it, or as a customer, I was in the center of whole the product evaluation. So I would rather say, it is the flexibility, agility, as well as how creative and how you keep your customer at the center of it is what helping all open banks and neobanks across the world. So that's my take on it. So,
Thanks a lot.
My name is Giri Shankar. Even after you do all the pre-credit checks, etc., there could be slippages in it. So how do you manage the slippages? Which leads to my second question. You said it's collateral free right now. Do you see a future which going forward maybe you incorporate some collateralized loans as well?
Yeah, the first question first. The data security is a very, very important when it comes to the open banking, because it's a third-party information which certain banks do share, and we also have our own customer bases, right? So the highest of the order when it comes to the data security, be it, there are certain guidelines, PSD2, as well as, the Australian guidelines, and back home for us, it is very, very stringent. So I just cannot emphasize on the fact that how stringent when it comes to data security. Of course, the C pages do happen. I would rather. Oh, good loans and the bad loans, what you're talking. Yeah, So, so far, by the grace of God, I would say that thankfully, so our recovery rates from the customer has been close to 100%. So that's because of the, the kind of market we are playing in. And why did that also happen is, as we said, though it is collateral free, it is multi-layered. We have our own people on the ground, and we have channel partners, people on the ground who would be seeing them on a daily basis or weekly basis. This is all those, the self-help groups or, the joint liability groups, what they would have already formed. So those people are always monitoring them on a real-time basis, one. And also the partner organizations, we don't just provide loans to everybody. So my target is to have, out of my customer base, 30% gets loan. So that 30% goes through that rigor of the maintaining their books of accounts on our platform, and based on that only they get loan. So otherwise, it's not, see, my logic, which I've always emphasized with my team, has always been responsible lending. Just don't go, sales is not my target. Recovery is my target. Okay? Because when you say you will give loan, you have 100 capacity, you will have 1,000 people asking for loan. But for me, what is very important as the person in the industry is how soon I recover my loan without having too many bad debts. That's where our whole team's focus is. So that has helped us. We are not trying to sell, rather we are trying to see if the person really requires the loan or not. So that helps us. Yeah, we are looking at it. That is again, it's a market space crowded already. So we are trying to see how I graduate my existing customer to that level. Okay, somebody who has no credit history, we are building credit history using my particular app, and also by providing them loan. So over a period of time, they graduate and they stay with me. That's a customer retention, what we are looking at. So yes, for the existing base, we are targeting to have close to, by the end of this financial year, which is by April, March 31st, 2024, our target is to have 500,000 customer base. Okay. So base, and I'm not saying I'll be loaning them all, that's the base. And based on that, we'll see based on their usage and the ability to repay what number it turns out to be. Okay. So anything else? Any
I think we're actually out of time.
Yeah, I'm sure.
Thank you very much. A big hand for our speaker.
Thank you.
Thank you so much.
Thank you.